Good morning, everyone. We will start the morning call. US stocks ended with a slight gain on Friday after shrugging off Federal Reserve warnings that there was more policy tightening to come. Asian markets are down about 0.5% to this morning, and so is SGX Nifty. Hang Seng in particular is down 2.7% as China saw its first COVID-related deaths in almost 6 months on Saturday, and another two people died on Sunday as well. One city near Beijing that was rumored to be as a test case for complete opening up for China. Uh, that actually worsened because of these cases, and they have further suspended schools, colleges, and asked residents to for the whole city to kind of quarantine for next 5 days. So this has dampened the sentiment in China. There was expectation that slowly the country will open up, but now there is a feeling that it can get extended. Uh, Brent crude oil prices have also fallen in last 10-11 days. They have fallen from $97 to $87 this morning on signs that market currently has surplus supply on one hand, and on the other hand, the extended lockdowns in China are impacting demand as well. Oil is expected to remain subdued in the near term. I will now invite the technical team to take the call forward.
Thank you, Jehan. Good morning, all of you. Today, looking towards the Asian markets, our market is likely to open with a gap down, and we're likely to witness some selling pressure or say the profit booking during a day. On the technical front, Nifty has immediate support at around 18,200 level. If it's break that level on the closing basis, then the selling pressure is likely to be intensified, which might take a Nifty towards 18,000 and 17,970 levels on the downside. Whereas on the higher side, 18,400, 440 will act as a strong resistance zone. So as long as Nifty sustains up below that level, major pullback rally cannot be witnessed. But definitely it's a stock specific market. One should be remain into the stock specific trading with the strict stop process. Coming towards the bank Nifty, 42,650 is the first resistance zone. Any move above that level only can attract some buying, which might take a bank Nifty towards 42,800 to 43,000 levels. On the lower end, 42,300 is the immediate support level. We need to keep eye on it. If it's break that level, then 42,120, 42,000 levels can be tested on the low side. Coming towards the Nifty Finance, 18,070 is the first support level. Below that level, 17,990 can be tested. On the flip side, 18,230, 18,300 levels are the crucial levels. We need to keep eye on it on the higher side. I think that's it from my end. I requested with you guys to take a call forward.
Yeah, thank you, Swati. On the derivative side, the data still continues to remain slightly positive. Open interest has come down with small selling pressure of about 100 odd points. Also, the PCR has come down drastically from 1.3 or to below 1 levels, below 0.9 as well. It's a good sign actually. VIX also below the 15 levels is good. It is continuing to go down. So all in all, from the data, it is slightly positive. However, if you look at the cost of carry and the options data for Nifty, it does suggest there can be some softness for a couple of days, but with the other data very strong, we can witness good buying action once the next couple of days are through. Importantly, the highest open interest amongst calls has shifted lower from 18,500 to 18,400 levels. That is a slight negative. Also, the cost of carry has continued to remain around 50, with this being the expiry week. So all in all, this couple of data suggests that for today and tomorrow, some selling can come in up to 18,100 odd levels on the downside, with 18,000 being the strong support area for Nifty. From the stock specific front, PSU stocks continue to witness good buying action. GAIL has witnessed a lot of buying along with IGL and MDC. So these stocks will continue to move up. Metal stocks can do well. So SAIL and MDC are likely to do very well in the coming sessions. So look out for the same. So yeah, that's it from my side. I'd like to ask the fundamental team to take over, please.
Yeah, good morning, Sunil here. We had seen government announcing reversal of its export duty policy. So what we see from this is that this will act as a positive for most of the companies in the steel, but it's not like the earlier scenario wherein we had seen sharp corrections at that time. Similar reversal cannot happen, mainly because currently the international prices are much lower than the domestic prices. International prices, if we see China prices, they are almost at around 28% discount to India prices. And even if we compare it, the historical level, it used to remain around 10 to 15% discount as compared to India level. So now the Indian mill has to export it at a much discounted price if they want to export it. So that will put some restrictions on companies who want to export from here. So no doubt there will be some shift of volume, and that's why the domestic prices can remain at the current level. But the export, they may not be able to make any good margins. So at such it's more of a marginal positive for a larger meal which are exporting. But on the other hand, if we see the pellet wherein the export was banned by government last time and now it is open, there we see a good opportunity over there. If we see the domestic pellet prices are at around somewhere around 7,600, whereas the international iron ore prices in China is at around $100. So corresponding price for the pellet, whenever the prices were at around $100, it was at around 10,600. If we see the recently, the iron ore prices has moved up from around 84, $85 to $100. So quite possible it may even correct also. So even if we take $90 as average price, so the corresponding pellet prices should be around 9,500, and currently the prices in India of pellet is around 7,600. So there is a good scope of around improvement of around 2,000 rupees realizations for Indian player, and then definitely volume will also gain in international market. So the company which are in pellet are likely to benefit a lot in this process, and companies in that are Godavari Power, and then Sarda Energy, and Jindal Steel and Power also has pellet, but they consume it a lot internally, but also export. And these companies are likely to benefit because of this. And Shah Metallic is also there in the pellet business. So these companies are likely to be more beneficial. We prefer Godavari Power because they have a captive mine, and at such the fine prices which will increase in coming period will not have any impact on Godavari Power. So they will get the full benefit of increase in the prices. So Godavari Power looks quite positive. It can move up very sharply in today's trade and can continue for some time also. Apart from this, NMDC also is likely to see some benefit. No doubt, NMDC do not export much in the international market, but because of increase in the prices of the iron ore in domestic market or pellet prices in the domestic market, they will gain on that account. So NMDC also looks positive from this impact. Apart from that, one more news is that embassy rating has been downgraded by one of the rating agencies, that is Acute, with and loan repayment to HDFC. Embassy, if you remember, is getting merged with Indiabulls Real Estate. The loan which has been delayed is not the company which is getting merged with Indiabulls Real Estate, but anyhow, in the merger, Embassy is transferring almost around 4,000 crores of loan to this company, and corresponding assets are just a land. So there again they can face, and this company will become Embassy company. So will have a negative impact. So yeah, that's all from me. Jehan, you can take it.
Yeah, thank you, sir. Today, one IPO will be listing 5-star Business Finance. It's an NBFC. We had given subscribe rating. Issue price is 474 rupees per share. However, the IPO was undersubscribed and it got bids of 2.1 crore shares against offer size of 3 crore shares and managed to raise 1,590 crores, which is 81% of the planned amount. 5-star provides secured business loans to micro entrepreneurs and self-employed individuals with an average ticket size of 3 lakh rupees. Hence, there is very low competition as practically nobody from the listed space at least is catering solely to this segment. We have Aptus and Avas who cater partly to this segment, and that too their ticket sizes between 8 to 10 lakhs. The real competitor for 5-star is the money lenders, where they operate in 3, 4, and 5-tier cities. Its robust underwriting process in this unserved borrower segment has resulted in healthy portfolio quality indicators with GNPA and net NPA of just 1.1% and 0.7%, combined with superior NIMs of 19%, resulting in healthy ROA and ROE of 8% and 15%. The AUM has grown to 5,000 crores as of FY22 from just 1,000 crores in FY18. This implies a CAGR of 50%. And company is being valued at 3.7 times FY22 book value and at 30 times PE on FY22, which is at a discount to players like Aptus and Navas who trade at 40 plus PE. Thus, we had suggested to subscribe to the issue from long-term perspective. But looking at the response from the market, it seems that IPO will open on a flattish note today. So let's see. From a long-term perspective, we remain positive. I will now hand over the call to Akansha. Yeah.
Good morning, everyone. Triya Infotech has received a contract from HPCL for managing its and supporting its IT infrastructure. Total contract value is approximately rupees 51 crore, which is spread across 3 years. This is sentimentally positive to the company. Thank you.
Good morning. Arcan Chemical Industries Limited IPO is getting listed today, while the issue size is at upper price band stands at rupees 1,462 crore. The upper price band is rupees 407 per share. The IPO has received strong investor response with a 32.23 times subscription. The company shall be listed in the B group of securities. The company has incorporated in 2003 and it is a leading specialty marine chemical manufacturer in India. It operates primarily in 3 product segments and such as bromine, industrial salts, and sulfate of potash. It is the largest exporter of bromine and industrial salts, and it is the only manufacturer of sulfate of potash in India. It is also having the lowest cost of production in terms of bromine and industrial salt across the globe. The company's key business growth drivers are its access to brine reserves at the Ryan of Kutch and its manufacturing facilities within close proximity to the captive Jakhau jetty and Mundra port. The company operates within an industry which has high entry barriers. It requires a long gestation period in order to establish a sustainable position in the market. The company also has a plan to expand its product portfolio with an introduction of bromine derivative performance products over the next 2-3 years. And these products are high-end flame retardants, clear brine fluids, and PTA, for which it is setting up a new facility which is expected to commission by Q2 FY24. Over the last 3 years, the company has delivered the robust revenue growth of 36.3%, and EBITDA has grew at 77.7%. Further, the company is expected to utilize its fund for the redemption of NCDs, which is expected to improve its debt to equity ratio and profitability. It is valued at a discount based on its EV by EBITDA of 12.7 times compared to its average valuation of peer companies like Tata Chemicals, Neogen Chemicals. And hence we had recommended subscribe to the issue, and we are positive on the stock with the long-term view. Thank you.
Commodities team can take over.
Yeah, thank you very much. Good morning, everyone. We may see continued correction in commodities. We recommend to sell gold around 600 to 650 levels, and prices are expected to test 50 to 200, 250 on lower end. So again, 52,000 is a good level to enter long, and we might see some pullback from 52,000. So selling on rise is recommended around 50 to 650, with maintaining a stop loss of 60 to 850. In silver also, we may see 61,000 resisting. So one should sell around those levels, and prices could correct till 60,000 on a lower end. So selling in silver is also recommended. In metal fronts, we may see some correction. Copper might test 665, 662 levels. Again, which are supportive levels, and one can initiate a buy around 660 to 660 levels, maintaining a stop loss of 657, and prices could pull back from these levels. And though on upper side, we may see profit taking around 670, 77, 78, and that could be a range for the day. In zinc, we might see 265 could be a supportive area, and prices could witness some pullback from these levels. So again, on higher end, 270, 272 seems to be a cap, and one may see prices rally. Aluminum also looks attractive, supportive at 206 levels, and one should initiate a buy with a target of 210, 212 on higher end. Crude, we may see some correction further. 6,400 could be a next target in crude. So selling around 65.80 is recommended, and one may see correction till 64 to 63.50 on lower end. Yeah, that's it from me. I'll ask Ria to take off from here.
Good morning, everyone. So on the currency front, we have seen the new budget that has come out for the UK. They have highly considered that the inflation is a danger right now, which has come at 11.1%. So they have made a lot of changes into their income tax in order to fuel the budget that of $55 billion that the new exchequer has released in order to support the energy cap that they have introduced, and also to support the housing income support. If you look at the dollar index, it has already corrected 4%. Right now, it is stabilizing around 107.20 or 107 levels. According to the CFTC position, there has been a net short that has been built up into the dollars. This is indicating a bearish sentiment into the dollar index right now, and it could and also indicating that the highs might have picked out. If you look at the USD INR, it has opened at around 81.87, stabilizing at around 81.85. You could see a sideways momentum into the pair in today's session. The resistance is at 81.97 and support is placed at 81.70. So that is the range that the pair will remain in the intraday sessions. As far as other pairs goes, we are seeing quite a volatile momentum in other pair. GBP INR has done a gap down of 97.24. Look for a breakdown of 96.77 to go short into the GBP INR. You can go short for a target of 96.20 by keeping the SL at 97.20. So a huge short position could be built up if the pairs gives a breakdown to 96.77 in today's session. For the Euro INR as well, the sentiment remains bearish. You could see it testing the levels of 84.03. Thus, you can go short below the level of 84.26 for a target of 84.03, 83.75 by keeping the SL at 84.45. GBP INR will remain in a volatile session within the range of 58.45, 58.23. And a sideways momentum could be expected in today's session. That's all on the currency front. Thank you.